Hello and welcome to this Astranti YouTube video looking at the pre-scene knowledge questions. This is one part of our pre-scene pack, which also contains videos looking at the pre-scene, videos looking at how to apply the various different CIMA models to the pre-scene company, and the top 10 most likely unseen issues, as well as the industry pack analysis looking at the technology park industry. And that's one of the products that we produce here at Astranti for the strategic case study. In addition to that, we also have our technique pack looking at how to approach the exam and how to plan your answers, and also the theory revision pack to make sure you're up on all the key theories you need to know for the strategic case study exam. So let's take a look through the pre-scene question pack. And essentially what this product is about is to check that you have read and understood the pre-scene. Because the pre-scene is actually very, very important. You'd be amazed at how many students do not read the pre-scene thoroughly enough. And the examiner has actually specifically mentioned that several times in their examiner reports. So the whole purpose of this question pack is to test your knowledge. You should be able to answer these questions if you have read through the pre-scene and you have understood the pre-scene. So let's take a look at some of the questions. And the first one we've got here relates to the liquidity of KCTP. And it's asking us whether the liquidity is worse than at this point last year, whether it's improved, if we can actually tell, or if there's been no change at all. So how would we go about answering this question? How would your pre-scene knowledge help you answer this question? Well, liquidity relates to your day-to-day shorter-term cash flow, how much money you have to pay off bills as and when they fall due. And that's different from your longer-term solvency, which is usually analysed through gearing ratios and debt to equity, etc. And the best way to calculate the liquidity and to assess the liquidity is to use the current ratio. And the current ratio is a ratio of your current assets, so money that you are essentially owed over the course of a trading year, against your current liabilities, so money that you owe over the course of a trading year. And the current ratio ultimately looks at how many times over you could pay off your current liabilities with your current assets. And the higher the ratio, the better. And any ratio above 1 is considered good because it means you have more assets than you have liabilities. So let's calculate the current ratio for 2019 and 2018 for KCTP. And that will give us an indication of whether it has improved or not. And if we look at the statement of financial position that was given to us within the pre-scene, we can see that the current assets in 2019 was at $331 million advent, and the current liabilities was $368 million advent. So if we divide our current assets by our current liabilities, we get a current ratio of 0.9. And that's not a good thing, because that means we have more current liabilities than we do have current assets. But of course, the question is not what is the current ratio in 2019 or whether it's good or not. It has it improved or not. So let's compare it with the 2018 figures, where the current assets were $298 million and the current liabilities were $267 million. And so for 2018, the current ratio is actually 1.12. So it was actually above 1. We had more assets than we had liabilities. So actually, the liquidity has gotten worse over the course of the year. The current ratio has decreased. So the correct answer is liquidity is worse than at this point last year. And if we click submit, we can see, yes, that is the correct answer. And then we can see why it is the correct answer. It goes through those calculations that I have just discussed. Next question. KCTP have been offered the opportunity by a rival company called Cap City Tech. Now, they are a profitable company with a net profit margin of 30%. And the current asking price is currently $2 billion advent, with a net present value of 225 million Advlan dollars. So if we were to undertake this project right now, we'd be adding 225 million Advlan dollars worth of value to our company. And it's considered low risk because it's the same industry that we're currently in. It's a going concern. There's no problems with it, etc. We'd just be purchasing it and bringing it into the KCTP group, so to speak. So this is the kind of thing you will be asked in your exam. You do get questions over these sorts of projects. And a good way to break down projects when you're asked them in the exam is to use the suitability, acceptability, feasibility. So is it suitable for our company based on our mission, our values, our strategy? Is it acceptable to our stakeholders, our tenants, our shareholders, our employees, etc.? And also, is it feasible? Do we have the resources available for it? So let's look at each of these and see which one is unlikely to be met by this project. Starting with suitability. Is it suitable for KCTP given how KCTP operates, given the industries it's in, given its strategy? Well, of course it is. It is in the same industry as KCTP. It's a profitable company, so it's not going to put us at any risk, etc. So it will tie in with our strategy. It will be suitable for us. It will still be about providing a platform for strategic innovation, etc. What about acceptability? Well, it's got a very high net present value, 225 million Advlan dollars, so our shareholders, etc., are likely to be very happy about that. But what about feasibility? The current asking price for this company is 2 billion Advlan dollars. 2 billion Advlan dollars. And think about how much cash that we have in the bank at the moment. We have 264 million Advlan dollars. So we have nowhere near enough to pay for it. And particularly given that a lot of that 264 million is going to have to go towards working capital requirements as well, there's no way we can afford it. We'd have to take out a huge loan. We'd have to actually triple the amount that we currently borrow. We actually borrow less than $1 billion Advlan dollars at the moment. So our gearing ratio is going to increase by a substantial amount, and we're going to be tripling the debt in the company. So it's unlikely this is going to be a feasible project given the price is too cost prohibitive. And you can see that is the correct answer, and you can see in the solution, similar to what I was saying as going through the question, it's going to improve profitability, it's in the same industry, so suitability-wise there's no problems, shareholders are likely to like it because the NPV is positive, it's not going to impact existing staff. But the price is too high at the moment. We would struggle to be able to afford it, and therefore it is not feasible. And the final question in this sample, put the following in order from the most important to the least important. You see we've got various different things here. And the way to look at this is to think about the Carroll's CSR pyramid of importance. Think about what is the most important on that pyramid and what is the least important. It's not necessarily a case of most and least important, but you fulfill one level of the pyramid before you move up to the next one. And it goes economic, that's the most important, the basic thing, a business must be economical. Then it must be legal, must abide by all laws. Then it must be ethical. And finally, philanthropic, which is where you are charitable, etc. So what we need to do is rank these from economic to philanthropic, and to put economic at the top. So what is our economic requirement here? Well, the economic requirement is to expand into neighborland to increase profits by 10%. We're being more profitable. That's the economic factor. Next is legal. Which of these relates to legal? Dropping a snack supplier, spending 500 million Advlan dollars to bring buildings and equipment up to legislation, or investing in building schools and technology labs within schools? Well, it's the bringing the buildings and equipment up to code. That's the legal. Then ethical is dropping a snack supplier because of using unethically sourced animal material in their products. And finally, the philanthropic is the investing in technology labs, as that's a charitable aspect. So that's the correct answer. As we can see here, got copy of the Carroll CSR pyramid from economic to legal to ethical to philanthropic, and that is the correct answer. So ideally, we would want to do all 4 of these, but we must be profitable before we move on to the next level. We must be legal, we must be ethical before we consider philanthropic. So that brings us to the end of this sample video looking at these questions. If you do want more of them, then please do see the website for the knowledge question pack. Also, do take a look at all those other pre-seen packs that we produce, as they're really useful for giving you the information you need to pass at your exam. Also, check out the full Astranti course, which will provide you with everything you need to do to pass the exam, from revision materials to technique guides, pre-seen materials, also mock exams and feedback as well. So do visit the website www.astranti.com, and also click the like and subscribe button at the bottom, because we're going to be producing many more videos over the coming months. So thank you very much for watching, and I hope to see you all again soon.